Porinju Veliyath is with us. He's Managing Director and Portfolio Manager with Equity Intelligence. Porinju, good morning. It's a pleasure, as always, to see you, and good to have you here. Porinju, the pay commission news yesterday gives me a nice way to set the first question up. A lot of people have been betting on consumption picking up, consumption doing well, because infrastructure revival is still some time away. And many in the business have been saying that this pay commission is going to give that big boost, right? It's maybe one time, but it can be substantial. The question, simple question is, it's the total amount which we're talking about is about 1 lakh crores, 1 trillion rupees. In your assessment, do you think majority of the people are going to spend it or save it? It's a simple question, but I think markets would like them to spend it. But will they?
I would say many people have been not saving, and some of them are underspending. So they will be adjusted by the pay commission, thing. The employees, the workers will be better off. When people theoretically talk, this will increase the consumption and there will be a boom happening in the middle class consumption. I don't think practically, this all have just sentimental value. Otherwise, nothing really on the grounds. These are not important. And Shant, you need not bet for the pay commission report, for the increase in the infrastructure spend. It's a very different thing, and that is already underway. The government is doing a lot of things and further big expenditure is expected in EPC and construction, other infrastructure projects. So one need not really bother about that aspect. We are going in the right direction, and the consumption boom is definitely there. Even though there was some pockets of slowdown earlier, I think we are, in general, our economy is looking much better from a future point of view.
Okay, fair enough. Actually, my parents are both pensioners now, recently retired from government service, and we were having this conversation yesterday evening, Porinju, and I asked them, what are you going to do with the whatever little bit of money, because I guess the amount of increase for pensioners is smaller, and of course people who retire now after the implementation of the 7th pay commission will have reap the full benefit of it. And I asked them, are they going to spend it on something? And that's, I was telling them, they're not active market participants or anything. I mean, they barely watch TV. I was asking them, this is the mentality that that analysts believe that this is going to lead to a consumer boom. Consumer durables, autos. They told me that it makes no difference. I mean, they're not going to change their habits, spending habits, because of some extra money coming in. So that was quite telling. You are saying it doesn't matter at all.
No, it's good for them. They can even send some more money to me. Some money to me for equity investment. There will be definitely that it will lead to some kind of extra savings by a lot of citizens. It's good. Definitely, it's possible.
I'm sure the total boost doesn't make the threshold that you have for accepting money, Porinju. But go on. That was on a lighter note. Go on.
Equity offers great opportunity going forward for the savers in this country. We have so much, something like 500 billion kind of savings, and there is a huge scope for a lot of money coming into the financial markets, the financial products, especially equities going forward. So that's what I heard many people talking about domestic buying envisaged in the stock market. I'm very bullish on that. People are so much worried about FIA selling stocks, but I'm very confident the next big bull run in India is going to be, it will be by the domestic individuals, savers investing into the equity market. We are very small in that. Only 2-3% of the population in this country have some exposure, and 90% of them are not really active and having any significant exposure. If you see, I'm telling you, it's below 1% of Indians, adult Indians, have an exposure, a reasonable exposure to equity market. So it is showing huge potential, and I'm very confident about markets going forward. And luckily, we have an economic atmosphere, an environment today, which is supporting that investments.
Yeah, yeah, fair enough. Although, to that often repeated point that equity, I agree. I mean, percentage of, and I think there was a S&P study recently which said that amongst emerging markets, financial literacy is lowest in India. I saw a tweet from someone in this regard yesterday. But the point that you were making that only 2% invest in equity, and maybe there is scope, but the point also is that uh, for the vast majority, what they earn is spent in consumption, I mean in living. And equity is the last thing on their mind, maybe not on their mind. Savings, for that matter, are the last thing on their minds. So it's
Prashant,
also about, yes, go on.
those who spend all the money, what they earn, we know the vast majority of Indians are like that. It's a lower middle class and poor people. They cannot think about investing in anything, and that is segment we all are, hoping and praying, but not really working in the last many decades. For those people being empowered, coming up, their income goes up to a level that they can save some money. So we all are, there are a lot of aspirants in that group, the middle class and the lower middle class people. That is one thing, we always induce us to look forward positively. So I feel this saving, see, we are now, when it comes to equity investing currently, we are talking about those people who save money. And there are a lot of savers, not like what you said, these savers, but they had been, in the past, they have been looking at real estate and gold kind of investments in a big way, proportionately very high in India. So, but that is going to change. Now, knowledgeable people have realized the real estate is not going to be a great investment in the next 5-10 years, and others will follow. So this is one very important aspect. I'm telling you, equity will be attractive, and people getting scared about this small FI selling and all, they will change their attitude. And I'm telling you, we have scope of at least 100% higher number of individuals in India investing into equities directly or through mutual funds. So that is going to be very interesting. And another aspect, a lot of people, knowledgeable people, they have become a bit bearish on India, not or neutral on India, because of the high price earning multiples. I saw this week, many reports that India is the highest price earning multiple when it comes to equity market, so around 15 on a forward basis. So 15 PE for India. Now the question is whether it is low, whether it is high, or whether it is just okay. I believe it is very much reasonable to have 15 PE, leaving scope for further appreciation, because India's economic environment is very different than other emerging markets, or even of course, the developed markets. We have long way to go. We have long way to progress, and our growth rate is going to be much higher than today, coming in the coming years. Whereas every other major economies, they are struggling to maintain the today's kind of 2-3%, or China will struggle to have even 5-6% growth next year because of that high base what they have today of $10 trillion economy. So here India is just a $2 trillion economy, as I always say, has a huge scope to grow from a low base, and which is important for the so-called, what you told, people have no savings. They have hardly money to spend and, meet both the ends.
Okay, all right, fair enough, fair enough. Got that. So you're bullish. I mean, structurally you're bullish, and I don't think there's anything which can
Okay.
change that underlying view, the basic big view. Fair enough, got that. I've got a long list of stocks here which we've discussed in the past, starting from May. I can go even before that. I mean, you came up with Jubilant Industries, Anantraj, Vardhaman Textiles in May. In June, you talked about Shemaru, Saregama. In July, spoke about companies with potential management sort of change, Bombay Dyeing and things like that. In September, you came up with Transport Corporation, Tata Global. And last interaction in October, we discussed EPC companies, construction companies, right? I mean, Simplex, Om, Pratibha, Jaykumar. So I'm going to ask you a easy question, but difficult for you to answer, I guess.
So did you buy these stocks?
What makes your portfolio? Okay, just what is your portfolio looking like now? Has it undergone a significant shift over the last 5-6 months?
Not much,
And
Prashant.
what is it looking like now, right now? Yes.
I want to remind one thing. These are not really stocks in our portfolio. There are stocks. Out of what you told, now FCEL or Tata Global Beverages, NIT, these are all our core stocks. And one more thing, we do not have too many stocks in our portfolio. Typically, a portfolio of ours in a client portfolio will be 8, 9, 10, maximum 12 stocks. That's how we structure. We are well, having concentrated portfolio. And I always have seen that is what makes money. See, people generally investing, somebody told something, they buy it. They read something in the newspaper, they bought it. They saw from a business channel, they got an idea. If they go on accumulating stocks like that, it's not going to work. I know people who have got 50 stocks portfolio, 100 stocks portfolio. It won't have a punch in investing. Somebody with 50 stocks portfolio, 3, 4 stocks go multi-bagger 5, 10 times. It won't have an impact on the portfolio positively. Whereas you hold 10 stocks and 2, 3, 4 of them goes multi-baggers, then that's very big. The portfolio performs. That is why perhaps we have been, this is one style of portfolio and stock picking, which has always given us some huge outperformance in the markets for the last many years.
Okay, fair enough. What is the portfolio broadly looking at like? I mean, for obviously it's client-wise portfolios, but what is it? What is it looking like now broadly? And have you made significant changes over the last many months that we've been speaking?
Out of the stocks we discussed earlier, Force Motors is something I booked profit, but I'm still liking the stock. There's nothing wrong. Our clients got long-term capital gains. The stock was 7-8 times higher after, around 14, 15 months. So we take advantage of that kind of opportunities in the market. NIT is something we are very firmly holding, even though it has more than doubled. So sometimes you have to hold for very long term, and sometimes Indian markets, especially it's very volatile. You get a lot of opportunities in the medium to short term. So nothing wrong in taking advantage of being married to the stocks and go on talking when it is at people buy at 10 p, then the stock very well, it goes to 20 p, 30 p, at 60, 70 p also people go on talking good about stocks. That is something one should avoid in equities, in value investing, because you have to be very cautious about the valuations and always play with the margin of safety. But I'm telling you, going forward, India has tremendous opportunities in all those regards. And one thing I want to tell you, Prashant, the architecture of Indian economy is changing. This is not a new idea I'm telling you. Many people are aware about this. They know this theoretically, but the impact it can have on Indian economy and on equity investors in the future, they may be underplaying that. When I say the architecture of Indian economy changing, there is a huge structural change happening, but it may take some more time to make it visible for the normal person. See, I talked recently about the changes happening on the federal system. Always India had a major challenge, and people were very unhappy about the regional politics. The regional politics used to pull down the economies in the states, and it used to be dirty politics, a lot of vested interest. They want to be in power. They blackmail the central government. They try to pull it down. So it was always a challenge for Indian economy, I would say. I'm not talking politics. I'm telling this was a challenge for Indian economy. Now what is happening? I think what Narendra Modi government has done. The states are given the powers. State governments this year going to have 1,78,000 crores more, share of central revenue. It has gone from 32 to 42%. And they have been, given more powers, more responsibility for the economic growth of each state. This is Niti Aayog is responsible, and government is doing very big things, but very unfortunate. Media, a lot of media, the major part of the media is not covering these positives happening in Indian politics and Indian economy. Media is more, they are focusing on small, silly, irrelevant things and trying to criticize, bring negativism all over the politics and in the economy, which is very unfortunate. I'm telling you, open your eyes. You have to see with a better sense what's happening in our politics, what's happening in our economy. We are much better than the earlier.
Porinju, just one point. Just one point. This is the political economy. We can have a long discussion, and I take your points. I mean, they're a big change. I mean, this is itself a big change. States competing for investment, and I think it's only good. But I think that's been highlighted. Now the point is, what will states do with all that extra money, right? I mean, so we have to start to see performance. That change has been made. States have been given more power. I think that got very well covered. But then now what? Now we have to wait for for one to see the fruits of that. Let's just come to your portfolio construct, Porinju. Oh, so what else? You said you book profits in Force Motors, you're holding on to NIIT. What else?
In share shipping and logistics. We book profits. It went to up to 850. At that price, I didn't see much value, so we exited.
Okay.
Some problem?
Okay, go on, don't stop.
Oh, okay. I thought you were not clear. So this kind of restructuring happens in the portfolio often because we have got a volatile market. That's why perhaps we could make over 40% return in the last 1 year, when index and Nifty Sensex were in negative territory. And I'm telling you, thousands of investors in this country, they are making huge money irrespective of the Nifty and Sensex. So that is real value investing. And in India, there is
You
no
said
other.
you said the maximum stocks you own is to about 12 stocks. Can you give me the 12 stocks?
Oh my God,
No,
that's
you don't
not
get
fair.
the full
People
list of
won't
12
invest with
stocks.
me. Then people won't invest with me. They will just listen to NDTV profit and make the portfolio.
No, I don't think that's going to happen. I mean,
Most of the stocks are known already.
that's a myth, by the way.
And
That's a myth,
no,
which everyone knows, I think. Yes, go on.
so I have no, vested interest in those things. I talk, not many people nowadays, because there is very strict, severe restriction, which I appreciate to avoid any manipulations in the market, through media. Not only, nowadays through WhatsApp and other social media also, there may be some unscrupulous people trying to take advantage of, that. So always controlled by SEBI, I appreciate that. But at the same time, the viewers could be looking for stock idea. But I would comfortable leaving some industry was kind of like we talked about the EPC opportunities in India. I'm very serious about that. Not today, these companies, they have some debt. The bottom line is not very impressive, but that's a passing phase. These companies have been going through very bad phase in the last many years. And now, what a smart investor should identify is it time? Are these companies and the industry at an inflection point where you can make some very good money out of that? Yes, I feel like the Simplex Infra or Pradeva Industries. There are many companies. So, but I don't know about the top companies like L&T. That is well known and everybody is researching on those companies. But still, I'm telling you, the mid caps and small caps in India, not only in EPC, I think that is the sector where you can do great bottom fishing or whatever you call, and make big money. There are a lot of huge multi-baggers still available in that sector, and some of them may be listed only on BSE. Some of them may be very thinly traded, but individual investors can take advantage of that. Maybe a fund cannot buy it. So see how many, I know companies with 50, 60 crores market cap even 3 months back. Now it's gone to 300, 400 crores kind of market. How many of them? So still, but a lot of people are averse to that. They want to buy a stock which is in fancy and kind of things like a Page Industries or maybe some of those companies have corrected well. Maybe it's time to look at those companies. I'm not telling bad about them, but definitely if you are price sensitive and if you are valuation sensitive, the chances of doing mistakes are less in the market. Markets. I'm telling you, it's a paradise for stock picking, even today at this index.
Yeah. Yeah. Are you hinting at starting to like Page? I mean, it's something gone from 16, 17,000 to whatever, 12,000.
No, it's not. At least just come to a more rational kind of it's coming down to a rational kind of levels. I don't know. It's good. I don't see it exciting for me. And I have a habit of hating blue chips. And as I always say, I'm not keen on great companies. I'm always keen on great stocks. I'm ready to compromise on certain things, management quality, balance sheet issues, and the perception on the company in the marketplace. So some of them could be leading to huge underpricing, and a small change happening positively can make it multi-bagger. That is what always happening. So never think of companies which are having a great balance sheet, excellent management, which is having a moat, and all this will be at 60, 50 Ps, and it won't give you much money. It will be boring going forward. India, maybe you may be looking at such companies in the US kind of markets, but the structure of Indian economy is such, the real opportunity is much below those.
Porinju, do you own Anantraj in your portfolios? Anantraj?
It's an underperformer in our portfolio, and I love the stock. I think I have mentioned this stock at around 40 rupees in our this channel. Now it's the price is around 35 kind of levels. I'm holding. I'm personally also holding this stock. But real estate, I think maybe I was a bit ahead of time. And but I'm confident there will be some real estate companies.
What about Jubilant Industries?
When we first talked, it was 100 rupees. Now it's around 200 plus. There's nothing exciting at these prices.
You bought
But I'm
profits, is
holding.
it? You're holding.
So you are analyzing my portfolio.
You're holding Jubilant, is it?
Yeah, Japan industries. Yeah, because
Yeah,
people.
okay.
Again, I'm telling you, some people noticed that Porinju Veliyath is buying Jubilant, and they just went on buying it to any kind of levels up, went up to 300 plus. That's not fair. Look at me. That's what I'm telling you. Whoever talk, whatever kind of strong idea coming to you, don't compromise on these valuations. Look at now from 100 crores it came to 300 crores or 250 crores. Then you have to be not excited about that kind of a stock unless there is something magical or something, very huge change happening in the company. Now this is a company which is sober. They become profitable, but they have got still around 300 crores debt on the books. I'm talking about Jubilant Industries. So they can't make big magic in the figures in the bottom line. So you have to give it time. So it's a longer term investment. But I'm not very excited. But I think people holding it now can make some money going forward, but not for buying today or tomorrow.
Any new stocks you are studying? I mean, it doesn't have to be something that you bought or are buying right now. Anything looks interesting, attractive?
I would say these same stocks now, this Tata Global Beverages, that everybody has written off the company. Why people wrote off this company, because it did not perform. You cannot write off a company because it did not perform in the stock market. You should watch the working of the company, the changes happening in the management attitude towards this company. Now they are talking about profitable growth, and Starbucks have got a good future. So the valuations can, and at these levels of around $1.2 billion valuation, I feel there's a lot of safety, marginal safety in this stock, and I think it can reward. We are holding tight. Our price is around this only. We have been buying from 130 to 115 rupees. We have accumulated the stock. You have a very large exposure. I'm betting on that. It can be next 2-3 years kind of a bet for me.
All right, fair enough. Porinju, it's a pleasure. Thanks very much for joining us today. Thank you
Prashant.
indeed.